All right, everyone. So I hope everyone's doing good. To start the night, I do want to start with a quick question for you guys. Who here actually journals? And when I say journal, I don't mean I bought at this price, I sold at this price, I made this much money, I was red or I was green. That's it. Like, I mean, you truly write down, I felt this way in the trade. In the moment when I was in the trade, I could have done this better. Like, do you actually review or do you just put in the stuff people care about to see, the P&L, the percent gains? So think about that stuff as I start to speak on a lot about reviewing trades, how to look back on things that many people don't want to take into realization. Maybe their ego's too big. Maybe they just don't want to deal with the fact that they messed up and face that face to face with themselves. So as we do this, I'm going to have questions. If you guys want to verbally talk shortly when I ask, you can. If you just want to type it, that's fine as well. But I hope that I can show you guys things that you may not have thought about. Many journalers that I've known, and also people that sell like a journal script or just like they have a mentorship and they try and teach you how they journal. A lot of these people just throw that shit in there just so you like think that they're doing this. They're not doing this every day. They're not really like sitting back and reminiscing on everything that just happened today to fix that going into tomorrow. A lot of people hit a point in their trading career where it's kind of like, I don't have to do this anymore. Why am I doing it? So many people. And you said, how do I journal? I'm gonna talk to you guys about that a little bit. So yes, a lot. I do, but I need to do a much better job. Go back and review the trade notes. So this is gonna get mentioned as I go through this, but the biggest thing that I do, this does not involve paper or pencil. It doesn't involve online journaling you type in or that does it for you. This is literally sitting in your thoughts while the screens are on, while you're looking at the trade recap from when you bought and sold, and you just correlate everything back to the stock chart that you traded. What could you have done going off like recap? And I bought in here. This is what happened during the trade. When you're not in the trade reviewing, there's no emotions with like looking at the past that happened. Even if you had a loss, that just makes you realize things a different way. Like it's like deja vu, repeating what you just did. When I go back and review my trades, I sit, whether it's silence, whether it's like I write a few notes down with like head topics with the trade that may have correlated with previous ones. Maybe I entered too soon because I didn't want to miss the move. Maybe I sized too heavy and my emotions took over, so I have to write that down. I always process mentally what I did right or wrong, even if it's a green trade, even if it's one of my biggest gains ever. I'm always going back and I'm never pleased with the result. I'm always focused on what no one talks about, what no one can actually show. And that's the emotions, that's the mentality when you're in the trade. That's the fact of like you were up 50% and then it went down 25% and you sold when it went back up 25%, realizing you had a 50% chance to sell for that gain or a 50% gain you could have locked in. You let it go to red. And then when it went back to green, you took a 25%, which is basically cutting in half what you were promised earlier before going to red. I'm always looking at stuff people literally like you don't see on social media. People show they made this much, they break down why they did it, how they did it, but they don't ever talk about like what was the contract doing when they were in it? Did it have to go down? Were they holding in red longer than green? Were they green massive and it didn't sell? Then they got hit on a stop and they never mentioned like, oh, it pulled back. I got stopped out of this position. So as I scroll down, we go through a few of these. The first topic that I want to bring up is proper trade revising. So going over trades, was the entry where you hoped oh, hang on, I didn't even finish this sentence I typed. Hang on. Look at that. I'm in a rush right now. Hang on, I gotta rephrase this whole thing right here. So was the entry you wanted better before executing? I think this is gonna, I don't know why it's like that. So when I say, why was the entry you wanted better before executing? Was it better? Why was it better? A lot of people, they see in the moment before entering a trade, this is like the spot, this is where I need to do it. Like I have to get in right now. They get in and then they go red right away. Maybe they're down 25%. And then they see a different side of things they may not have seen in the moment from when they first entered that trade. I love mentioning this to people because no one really thinks about this. When you enter a trade, say you sell green, it's just like I ended the trade green. I'm satisfied. That's fine. How did you actually feel when you entered And then when the stock started moving right away with your position, did you go red right away and you were kind of like, oh man, that was faster than I expected? Those are the little things people tend to forget about, because if you tend to oversize and say in a regular trade, you're down 20%, you size heavier in the future, you're down 20%, you can't handle it. When looking at a trade from a percent perspective, it's the same exact thing being down 20% with $1,000 or being down 20% with $10,000. The percent is always going to be the same with that correlation. But with the sizing, that's when the finances come into a different term. You're risking more money because you're sized heavy, but the percents are identical. So I tell people, if you're not content holding the trade after you enter, in the moment before that entry hit, you were telling yourself, this is perfect. I feel very good about this. After it hits, you're sitting there thinking, okay, maybe this wasn't such a good idea. What can you do to fix that? Think back to like, okay, what was the chart setup looking like that made me want to take it in the moment? And then something may have popped up after that I did not see for me. You want to go back and figure out what you may have missed, because a lot of people, deception is very big on seeing one pattern but not recognizing another. So you trust one pattern without realizing, okay, there's like 2 to 3 possibilities right now. What's the highest probability outcome though between these 3 possibilities? And then after executing the trade, during the trade, did any emotions overwhelm you? When I say overwhelm, I'm talking a lot of people get sweaty hands. They start like tapping their desk. Their leg starts bouncing up and down, like whatever that case may be with anxiety or stress or you're worrying. Maybe you're just thinking in your head, I got to get out. Like I'd rather just sell right now and not deal with holding this trade. The minute you feel any of this, you have to get out of your position. And it's not because it may not go your way. It's only because before entering, if you're calm, you're collective, you're focused on, okay, when I enter this trade, this is my risk. This is my possible reward. I'm going off the chart. It's looking good. I like this. I'm calm. I'll size X amount of contracts and I'm feeling good about it. The minute you enter, within 5 minutes, you're sitting there telling yourself, okay, this setup didn't happen the way I thought. I'm not feeling too good right now. Maybe I should just sell for a small loss right now and just walk away. Journaling that is so important. So many people don't realize if you get scared sizing, let's say $50 in a position, which is only one contract for some people, say your risk is usually $200 for a normal size, you size $50 and you're down 50% on it, which is only $25, and you're freaking out. You just want to get out and not worry about minus 99%. If you're focused on the sizing, why is that freaking you out only being down 50%? That's where you have to really journal and figure out, what is my mental capacity, the sizing to not care if something does go like completely against me. A lot of people, and I'm speaking on myself in this term as well, we sell for a loss and it always comes back and goes big, or at least back to break even, back to a few 20, 50%, whatever the case may be. If you're ever sized too heavy and you have to sell that because you're worried that like you're getting nervous, I can't hold this if it keeps going lower, I got to get out before it's too late, you oversized. You need to track, okay, why did I oversize? What was it, the setup? Was it my FOMO saying this is the chance to hit big, I missed it earlier? You can't let thoughts that don't predict the future make you have executions. Every time that you think or tell yourself what if, or imagine if this happened, that's all hypotheticals. There's nothing logically coming out of that thought, because all you're thinking about is possibly the financial result you'll get. Or maybe it's the idea of, we just dropped 30 points, we're going to drop another 30, I have to get in. Nothing has to happen. I mean, it can sit there, you enter, the stock doesn't move the rest of the day. Nothing is going to happen because, oh, I feel good about this. Don't ever let thoughts that don't actually like have a logical perspective make you enter a position off of that hope or the what if. Those scenarios of thoughts never help anyone. What was the lowest you had to hold in the red? This is also something that I personally always go back and look at. I don't care if I hit a 500%. I don't care if I make $10,000. How much was I down at the most after entering the trade? From a percent perspective and also a financial perspective, what was I down? Was I worried at all? Did I not care because this chart was still holding the pattern or the trend that I was looking at? I'm putting all of these thoughts into one basket and pick and choosing, okay, can I handle this again? If I end up sizing heavier in the future, can I handle a 20% down draw even though I sold in the green? Can I handle that pullback? I'm always focused on that specific mindset. A lot of people don't care about it because it's like, oh, well, I sold green, it doesn't matter. If you're down 50% and you sell a profit at 25%, how is that good? Your risk is 50%, even though you didn't sell, it went down 50%. You sold for 25. Yes, you finished green, but imagine having that same trade scenario 10 times in a row. The few times you don't sell at 50% because, oh, wait, the last one came back. This one should do it too. It goes down to minus 99%, and there you go. Now the next trade you take, anything under 100%, sizing the exact same, you're going to be negative overall. So you have to really come to terms with, where am I going to sell out of emotions? When am I going to sell, or where am I going to sell from the chart? I need to figure out a good like persistent area or an estimate from a percent perspective where I can hold a position. For me, I can lose 2 to 3,000 a day, and I'm not flipping my desk. I'm not pissed off. I'm not trying to make the money back. I know what my risk is like. So I know, okay, if I size, let's say $1,000, I can lose that whole position. I don't care. But if I size, let's say 20,000, going down 10%, I'm not going to be able to handle that position. So I journal this so I realize, okay, well, today I was down 50%. This is like a hypothetical. I was down 50%, size 5,000. I was down $2,500. It came back and I sold at $1,000 profit. If I write that on paper, that is horrible. The fact I was down 2,500 and I sold being pleased at $1,000 profit. That's like a 2.5 to a 1 ratio for a risk to reward. I can't have that happen over and over. So I go back to like what I said earlier. During the trade, did any emotions overwhelm me? Like, was I freaking out when I was in that trade? Was there a reason I entered and it went red? Can I improve that somehow? I'm writing this down. I'm processing it in my mental capacity. I'm thinking about it. I'm trying to find a way around not going deep in the red and holding my gains longer when they're in profits. So compared to the sell spot, what was the risk to reward? And this is kind of like what I was speaking on earlier. From the contract low to the contract high, when you were in the position, what's the risk to reward in that aspect? A lot of people, it's like, I'm going to enter at 1.0. My risk is a 0.8. So I'm risking 20% to make whatever it goes up to, minimum 40%. So it's a 1 to 2 risk to reward. Some people will hold beyond 0.8. It'll be 0.7, 0.6. And then when they're down that much and it comes back to green, they sell it 20% gain, 30% gain. They held down over 20%, but when it goes back in the green, they're trimming at 20% or selling all of it. Yes, you finish the trade green. That's all that matters, is if you finish it. But imagine having that concept 10 times in a row. It's not always going to come back. You can't let those stops just not take you out and then hope that it, like, oh, it went down to 0.6. My stop was 0.8, but I trusted it, so I held it longer. It's not going to work every time. So you have to find a center ground with either a percent you want to cut at, or even maybe with your sizing being 1,000, your risk is 200 every time. So you size 1,000, you're risking 20%. You size 400, you're risking 50%. You have to figure out what your sweet spot is. So enhancing your trade review process. I've already spoken on a lot of this, but I'm just going to go over the bullet points. Go back and review the chart setup. What about the chart made you want to buy in? If you just buy in because, oh my gosh, we're going to, like today, perfect example, we just kept dropping. I got to get inputs because we're going to keep going down. What are you truly learning, whether you win or lose from that? Like, obviously, if you lose, you just say, oh, I chased, I had FOMO, I wanted to catch what I missed. That's easy to fix. You don't fucking do it. Like, there's no other way to like change that around. If you win a trade entering off of FOMO, there's no logical reasoning what you can like put down to learn from. All you're going to say is, oh, I chased it. It broke low on the day and it kept going. Low on the day is not going to break every time. I hate to tell you that, but that's not how this works. There's no 100% strategy. That's why risk to reward is very key. You have to outweigh the losses with the wins so that overall you're green. One win has to outweigh 3 losses. One win has to outweigh 2 losses. You can't let the idea of like, oh my gosh, we're breaking lows, I got to get puts. When or if you win on that position, what are you actually learning? Like, truly think about that next time you want to buy into a position like that. If you win, it's fine. That's totally fine. You made money, withdraw it because it was a lucky trade, but you can't do that every time. It's not going to work every time. Was there a roll-up opportunity after selling to get the same contract possibly cheaper? So one thing about me, I personally will not play the exact same contract if it costs more. Even if the setup is good, I always tend to either go out of the money, so it's a cheaper contract that I already played, or I'll play the same contract if it gets cheaper as the chart forms. So much stuff works out in your favor. You can always repeat it. Charts, they hold trends. They have you sell for 100%, it pushes back up. You want to get puts again. The contract's cheaper than the first entry. As long as the chart is holding, it's showing a possible direction. You can keep that in your mind of, okay, I made $500 today. The contract's back down to 1.0. I can buy two contracts for $200 total. If this position goes to minus 99%, I'm still green on the day, $300. I never, ever size heavier than my gains on the day if I trade after a green trade. So if I'm up $1,000, the most I will size on my next position is $1,000. I hate sizing heavier than what I win because then I have to use a stop loss to stay green on the day, and I don't like doing that. I like having that thought of whatever happens, happens. That way I hold the play and I can sell in green at any point when that happens. I'm expecting minus 99%, but any gains along the way I'm content with because that's just how I am. I either lose it all or I make green, whether it's 100%, 500%, whatever the case may be. So taking previous trade breakdowns, what is a common theme you see with losses and wins? This is also one thing that I do every day. When I finish a trade, I just think about, okay, what chart setup did I play? Was it a specific pattern? Was it just higher lows on trends? Was it a double bottom I got calls on and it ran upside? Was it a rejection at a heavy resistance? I got puts and it dropped on the downside. I figure out exactly what setup I took. I track it with it was either a win or a loss. I talk about how the chart looked when I entered, and I keep track of all of these different setups. And that way I have an overall percent of like my win rate. So if I take 10 trades with a cup and handle, I enter at the handle part on all of them, say 8 of them win and 2 of them I sold for a loss. I know that that trade setup is in my favor more than just 50% of the time. So I have a setup that I know is high probability, which means if I take that 10 times, overall, I'll be profitable. If I size the same for every position, I'm always trying to find for the winners, what was the best thing that I can keep repeating? Was it a setup? Was it size and light and then not worrying about sizing too heavy? And then with the losses, what do I have to stop doing? What is making me lose every day? If it has nothing to do with trading, it's your real life. Okay, take this journaling into your actual life. What is making me stress about trading? What is making me force trades that I need to fix in my actual life that will like bring emotions with me when I come to trade every day? You have to be clear-minded. Trading, reviewing that, it's important, but if you're not clear-minded trading the day of or trying to like learn new things, you're not going to comprehend it the way that you should. So it all comes back to clear energy, a clear mindset. And then at that point, when you size properly and play an actual setup, win or lose, you plan for both sides. I consider that a successful trade. If you had a plan, you follow it, there's no reason to be upset because you told yourself before entering, okay, if this trade does go bad, I'm only risking $200. I'm content with that. So if you sell for a $200 loss and you're upset, you have some evaluation to do about yourself. Can I actually withstand a $200 loss? Do I have to size less? That is where you have to start focusing on because your emotions will change the way you size. It will change the way you sell for a loss, and then you'll sell small for the wins. You have to dig deep into things that you may not actually think about on a daily basis. And this is one thing that I preach this all the time to you guys. So I'm hoping this is sticking for some of you, but always focus on the percent gains and not the financial gains or the money gains. Percents are always going to correlate. The money is always going to follow. 100% is 100%. But if you're in $1,000, that's only $1,000. If you're in $5,000, that's only $5,000. If they're both 100%, but the more money you put in, the more you can make. Switch that around. The more money you put in, the more you can also lose. So you have to come to terms with that when you review your trades. On the percent side, was I pleased with this? You have to go over that kind of stuff. So the last topic that I'm going to briefly speak on is improving habits to avoid losses. So when you're looking at yourself, everyone has bad habits. If you don't, I applaud you, but usually people have something they have to work on, and more than likely you come to a point where you fixed everything you feel like, but as time goes on, more things pop up. You figure out more stuff about you as you dig deeper. So when you're trading, you have to realize you're trading a chart that gives you a P&L. When you trade, the chart you are looking at gives you the P&L, gives you the results. You're not just entering a trade and then looking at your P&L and telling yourself, holy crap, I'm down 15%. Like, I got to be careful right now. Okay, so the P&L scaring you. What is the chart telling you? Like, the only thing that makes your P&L move, what is that telling you? So many people, and I used to be one of them when I first started trading. I put in $1,000. I'm down 20%. Holy crap, I'm down $200. I can't afford this. I got to get out. The chart's still holding in my favor. Why am I selling? I'm looking at the byproduct of what I should be looking at, and that's the chart. Anything the chart does, the money comes with it. So there's no reason to watch the P&L, because if you trust the chart, you trust the setup, you trust where it's going, you're on the right or wrong side of it, you know what's going to happen because you're preparing for it. You have to get in the habit of only watching the chart. Don't let that P&L freak you out, because if you were always like looking over your shoulder, like what am I up, what am I down, you may be size too heavy. You may be emotional in this trade. You got to change something around, because I don't even look at P&L when I trade anymore. I'm literally looking at the chart. Obviously, I have the tape and I have the I have the tape and the order flow for the contract I'm in, but I'm not looking at that saying like, oh, I'm in at 3, it's at 6, I'm up 100%. I'm just looking at the chart and I'm using the tape as guidance. Like, where are people buying? I'm not using that to know what I'm up on today. I'm just watching the chart and I'm selling when the chart hits a specific level. I'm selling for a loss when it breaks a specific level. That's how I work it. And I don't get emotional in most of my trades. If I do, I probably oversized or I'm freaking out because the chart's not moving. I just have to get out at this point because I expected something to happen and it's taken longer than I hoped for it to be. You have to accept that sometimes. Losses are fine. Keep them small. That's all it really is. So if you're in a long trade and a lower low breaks out, are you automatically out? So if I'm going long and a lower low breaks, that's usually my indication to sell, but it also depends on like what other levels are around. A lot of times uh when a lower low breaks on a bullish trend and you're in calls, I'll look to see how close the next lower low under that is. So I'm using levels like I'm using support like a level basis, level 1, level 2, level 3. I'll size in accordance to, okay, I want to hold until both of these two supports break, the one just below my entry and the one underneath that. So I'll size lighter. But if I'm expecting like this one support to hold, I'll size heavier because that's closer. That's my only level. If this breaks, I'm out. So my loss is going to be limited. I'm not going to have to hold longer. And if I do hold longer after my stop is hit, I have to figure out why I'm risking that. Why am I being so egotistic thinking, oh, like I don't care about the chart, like that support wasn't supposed to hold anyway. I'm just gonna see what happens. You have to follow like everything that you planned beforehand. If you lie to yourself saying you're gonna sell here and you don't sell, you're never gonna learn to like be obedient with what you're doing. You're never gonna sell for a small loss. You're never gonna sell when you should when you're green. You're gonna hope for more that you don't deserve. And those habits are not going to keep you away from losing. You're gonna hit big, and you're gonna slowly trickle down back to where you just were, hoping to hit big again, promising yourself, oh, if I hit big this one time, I'll start sizing correctly. I'll do this correctly. I promise you, that's not going to happen. No one hits big and just starts sizing how they should. And if they do, they're going to lose. They lose. Okay, let me size heavier just to get that money back. One oversize, and they're back down to where they started. So focus on your gains during a trade that can reverse your entire thesis with holding. Yeah, put a thing right there. So one thing I talk to people about, whether experienced or not, usually when people have more years than me, they're like farther ahead. I'm always asking them like, have you ever been in a trade where like beforehand you thought everything was perfect, it was great, but in the moment when you're in the trade, have you ever like changed the way you thought? Like maybe this wasn't a good idea. How do you deal with that? How do you open up the thought process of, okay, I was wrong initially. I have to accept that fact. So I'm going to sell here and just be content with a 2% gain because the chart's not doing what I wanted it to. It's looking slow. It's not having that like push I wanted. So I'm taking my loss and accepting that. When I've gotten in that situation, I've always told myself like, oh, I'm just going to let it do its thing. Like if I lose, I lose. Maybe it can still bounce and I'll get my sell for calls on this position. And as I did that, I realized I would lose more than win when I got in that position of questioning my initial entry and then thinking maybe I should just get out and just remanage this as the chart gives me more indication for an up or downside. I would start selling stuff at break even more than I should, but it saved me from multiple losses and it never would outweigh it would always outweigh the wins if I did hold those positions. So I learned to do that not out of like, oh, I put my ego aside, but more so like this is a career. I get people treated like a casino. People want to make big money, but if you truly want this to work, you don't care about $50 on the day, $5 on the day, because you know like this is more than I was promised when I first started today. I'm up. Yes, it's only $5, but that's growth. I have something to learn from this. So when I'm up 10% and I'm only in $1,000, I'm up $100. I'm thinking like, okay, $100, like obviously that's horrible, but that's $100 I was not supposed to have today. I could have lost $200 today probably. So let me just get out of this. I'm not happy with what's going on. Initially, when I entered, I wanted to break out like pretty fast. I didn't want to hold this very long. We're sitting too like pretty. It's not looking good for my direction. I'll take this 10% and just learn from it, and I'll come back tomorrow, or I'll come back in a few hours and I'll let the chart form more, see if more stuff like shows. I broke that habit of holding longer. And trust me, it sucks seeing stuff go. Even when you sell for a gain and it keeps moving, that's cool. But I'm telling you right now, if you can't afford runners to hold and make money on those like positions that keep moving after you sell, you're not ready for it, financially or mentally. As you learn the game, as you grow financially with your portfolio, you can leave runners, and that's when you're going to learn new things. How do I let runners affect my mindset? Do I sell when I'm up 100% and my stop never hit? Do I sell when I'm up 200% and my stop never hit? So many people, they learn as they break out with trading. As they make more money, they have more stuff to worry about they've never thought about before. And that's where you start to like figure out new habits. Like, can I afford to hold and not care? That's the biggest thing about runners. And this is also one of the biggest things I tell you guys about. Losses are not losses if they are planned and managed. I tell people this all the time. And when they're new traders, it's like, how are you telling me a loss is not a loss? It's like, well, if you plan to lose X amount and that happens, like you plan for it. So why are you upset? And their only response is like, well, I lost money. Like, this is horrible. Okay, well, maybe your size too heavy. Think about it from a new perspective. Can you size less and feel okay with losing that you plan to lose? And it's always no, I can't. All I want to do is win. Well, realization, like that's not how this works. Nothing is just gonna like fall in your lap. You're not gonna win 100% of the time. That's where this managed and planned ideas come into play. Like, what can I afford to lose? Am I happy losing this specific amount? And of course, the big thing that I truly think affects almost every retail trader, and I'm gonna make this a little bit bigger because this is very important. All right, you guys. There we go. All right. So understand you will not get rich quick. People get rich quick in trading. I completely know it's possible. I've seen it happen with people I've helped in the past. The sad truth about making quick money in the market, it will never last if you don't know how you even got it in the first place. These miracle plays of 1,000% going all in, hitting big on a small port and having more money to deal with. If you can't grow a 500 account and $1,000 account, it's not going to be easy to grow or manage a $10,000 account or a $20,000 account. If you don't understand risk, if you don't understand trimming for small losses, over time, if you size less, obviously the money will last longer as you lose, but eventually you're going to come down to where you just were months ago. You're going to slowly diminish your portfolio and lose that momentum of making money. So it's all about the baby steps. You have to understand in every trade you take, there's literally only two scenarios. You win or you lose. There's no in between, you guys. Like at this point, I'm getting into just the realization of how this all works. This is going to be a very simple little talk that I'm going to give, and I'm going to answer questions, maybe show you guys some charts with some examples with how to manage your risk based off like reviewing trades and everything. But every trade that you take, there's two outcomes. You either make money or you lose money. Obviously, if you sell break even, you're still losing because of fees. So you have to understand that. End of the day, you have two choices. You finish green, whether it's like amazing or bad, you finish green. You sell for a small loss or you hold major loss and you take a big hit on your account, you're going to lose. So when you start to process this from an actual risk to reward perspective, or however you want to look at it for yourself, if you win, let's say 8 trades, I love doing the same example with everything. Come on, bro. I'm typing so bad. So say you win 8 trades, you lose 2 trades. Overall, looking at it from a percent perspective, you're 80%. You hit 8, you lost 2, 10 total trades. When you take this into perspective of the bigger side of things, what if these 2 trades both go minus 99%? And say for all of these 8 trades, you sell these for, let's just say, 20% gains. When doing the math on these, you're still going to be green overall for these positions, if I'm not mistaken. I may have to do, no, you're actually going to be red. Let's change this to 25%. So you sell every trade you take for 25% gains, but the 2 that you don't win, you hold to basically lose it all. So for every 4 trades you sell at 25%, one of these losing trades is going to take that away. So when you're looking at it from that perspective, why can you, I got to miss your trades. You're good, bro. So when you're looking at this from a perspective of, okay, well, I'm selling at 25% gains. I've won 8 times out of 10. Okay, well, when I ask people this now, tell me about your losing trades. How much did you lose on those losses? Was it 25%, just like the wins? That way, for every 2 losses, a 25% loss, you basically eliminate 2 out of the 8 trades you sold at 25% gains. You're left with 6 trades for 25%. But if you let these 2 trades just go to 0 because, oh, I sized for 0, that's how I trade, you're risking 2 trades that will wipe out 8 trades at 25% gains. So your risk to reward, obviously, from a win to loss perspective, it's a 1 to 4. But looking at this from like potential of growth, you're not going anywhere. There's no benefit. Now, let's just say you sell these losses, let's just say 50% loss. Now we're looking at a different scenario. You're green, but is there any way you can not hold down 50%? Is there something you can figure out to change? Is there a habit you could break? Maybe you could like trim while you're in the green to limit your loss possibly. You have to find some type of system that works for you. Now let's do one more example with this real quick. We're going to switch the roles around. We're going to say 5 trades, you're selling for a 20% loss. And then 5 trades for wins, you're selling for 20%. So right away, you tell someone, oh, I'm 5 for 5 on the week, or I'm 5 for 10 on the week, 5 wins, 10 trades total, so 5 losses. Going off of that, it's like, okay, well, that's not very good. Okay, well, let's look at it from a better perspective. Let's look at it from the percent gains for the wins and then the percent loss for the actual loss on the trade. If you have 5 trades that you sell for a loss at 20%, you're managing risk. You're not letting it go red. You're trusting the fact that, okay, this is my risk. I have to follow it. I'll trust it because I know my wins will outweigh these losses. These losses are normal. I have to take them to learn. I have to take them throughout this journey. I'm content with it. And it's hard to do, but you have to come to that realization. These 5 trades you sell at 40% gains, here's the best part. For every 2 losses you take, 1 win will wipe those out. So 2 of these trades that you sold for 40% gain, that's going to take out 4 trades that you lost at 20% loss. So at that point, you're stuck with 3 trades going 40% and 1 trade that you lost 20%. Overall, you're making more money than the previous example where you had 8 trades at 20% and then 2 trades at minus 99, or even using 8 trades at 25% and 2 trades at minus 50%. This example right here, you're more financially growing than the example I had before. And let me copy and paste this so I can put those side by side with each other. I'm going to take this back to 8, this back to 2, change this to 50, and put this back to 25. And I'm going to shorten this a little bit. So these 2 examples right here, Let me put a little dash between them. The top one, you're 5 for 10. That that ratio is horrible. It's true. Like when you just say, "Oh, I'm 5 for 10 on the week," people probably think there's no way you're green. If you manage risk like this, though, oh, you're chilling. You're definitely green. But when you tell someone, "Oh, I'm 8 for 10 on the week," and you don't say nothing else, it's like, "Oh my gosh, but you only lost 2 trades. That's crazy." Not realizing with this, I may have done this backwards actually. Hold on. With this example, for every 4 trades that you win, that takes away 1 loss. When you go down 99% on the loss, but you sell for gains at 25%, you're at break even right here. Maybe even slightly red because of fees. So take that into consideration. The win loss means nothing unless your risk to reward is giving you those profits. There can be a trader that's 2 for 10 on the week and they're profitable compared to someone else being 9 for 10 on the week. That one loss that's oversized can outweigh every gain you had for that 9 wins that you took. So at this point, you guys, if you guys have any questions you want to ask, I'm going to slowly pull up my charting just to give you a quick breakdown on how I review stuff. Make sure, Breezy, your thoughts on buy and hold on SQQQ shares. SQQQ is opposite of SPY, correct? Like that drops when SPY goes up. How does that work exactly?
It basically goes up when QQQ drops.
Okay, so then the TQQQ does that's the inverse of SQQQ. Okay. I don't trade those. I know people that have. So, I mean, for me personally, I am not looking to buy any shares of anything right now. That's just me. I'm still waiting to get stuff once we go lower. I think we're still going to have a lower time frame of price action, in my personal opinion. Like lower highs are going to form more than likely, but I am personally waiting for like that drop off that I would rather wait to happen than force buying shares now and have to hold for the next 10 years just to get back to break even. Now let me share my screen to you guys see my Weeble screen? Is that what you see right now?
Yes.
All right, perfect, perfect, perfect. Let me close this out and switch over to I need this to go away. I don't know how to make it go away. There we go. Video review. All right, so I'm gonna break this down to you guys just real quick, and I'm gonna use the example from today from a trade that I had, just so I can speak with like a heartfelt emotion standpoint instead of just telling you like, oh, if you would have done this, it would have been better. I'm just gonna break down what I've already done for myself to show you what I could have done better or maybe fix to make more money. I was content with what I made. I made more than what I shoot for, so I was fine with walking away after that first play I had. Well, I think it was the second on the day or something since I had a swing play. All right, so let me take this away. So I played puts around 10:52 ish on this big candle. I got puts on this push, and I only played this. Uh, I played my put position only down to here in this area. We broke 4,400 and we didn't have that flush. So I waited to see if we could break under and we kept chopping. So I got out before anything happened. I took my, I'm just going to say 4 figure gain. I don't want to say an actual number. I took my profits and I was happy. I literally like I just wanted to make money today. I had no goal. I was more worried about like reserving my position for a loss. So I was like sizing how I was content with losing X amount. I wasn't prepared to lose the whole position, but if it came down to that, I would have been fine with it if it had to have happened. So after I entered for puts, the contract it went down, I think $100 a piece. That was the lowest the contract went that I was in, and the flush actually happened. I sold happily, being up $2 a contract. So that risk to reward for being in the trade. After I entered, the contract went down $1 a piece. I sold for a profit of $2 a piece. So my risk to reward was a 1 to 2. It's not the best, but it's better than a 1 to 1 or maybe a 2 risk to a 1 reward. So overall, I made sure my risk to reward was in my favor long term. This is where I broke down what I could have done better. A lot of the times, and I'm sure other people are the same way, they hit a trade and they're happy and they just move on from that aspect. When I'm done with a trade and I sell, I don't sit here and look for like, oh, I got to get calls now. I sold puts down here. I got to get calls for this run up. I should have been watching for the same rejection that I initially got the first time. I could have played the double top right here, the triple top, whatever the case may be. I could have sized less since from my first entry to the next possible entry, it was almost a 2 hour time frame difference. The IV was basically shorter in the day because of getting closer to expiration. They're moving faster. Contracts were cheaper. So my 5.5 entry the first time came back to about 2.5 to 3 for another entry I could have taken. The idea of knowing that, obviously, I did not check that out during the market. This was like afterwards when I looked back and said, what could I have done different? I could have taken profits, sized in for a lotto. So being up X amount, how much can I lose 100% of and still be happy with my overall gains? If I size my total gains for the day, I'm definitely not personally content with losing my entire green day just to see if I can make like more money off of another setup. So when I went back and looked at this, I could have easily played a low risk, high reward of this double top right here, going off the same rejection I played the first time around. If I would have done that, I don't think I would have held the entire move. I'm not like most people when they're like, oh, if I would have held this long, I would have sold it 3,000 a contract. Like, are you really gonna hold that long? A lot of people they just focus on the entry and the end result. All the stuff in between they don't care about. The fact that this pullback could have carried the contract from 500% back to 300%. Can you handle that emotionally? That's one of the biggest things. If you size for zero, you're just letting this play out like whatever happens, happens. So in this position for me, when I went back and retracked everything, my entry could have been better. Obviously, if I would have waited for like the pullback, I would have gotten in more expensive than my actual entry because once the pullback happened on the downside, the IV spiked on puts because everyone started to chase it again. So my entry was good, but from like I'm very picky about my execution, my sizing, my actual trade that I take. I could have done better with this because if I missed this entry, I could have waited for this to curl, push back upside, and I could have just put in my first position in this area instead of possibly looking for a roll down to get more out of what I already put in for profits. So that's one thing that I took away from today. I'm not the type to sit here and just keep looking for trades. I hit a goal that I am more than happy with. So for me, it was like I'd rather just not trade the rest of the day and just like be content with what I just did already. Like I usually don't trade this early in the day. A lot of you know that about me as a trader. I like to wait until after lunch hours, maybe 1 or 2 o'clock. I was done before noon even hit on the day. So for me, it was like, what am I going to do with my day now? Like I usually trade, I start looking for stuff right now. I start looking to enter a trade right now. If I would have kept that same mindset and just sat here for another 2 hours or even an hour, I could have caught another play and sized less than the first one. I mean, the contract was $300 less. Yeah. What question do you have about the chart? Any questions are good. Yeah. So if you're looking at this like a cup and handle, that is perfectly fine. And I'll show you why it's fine, but also why it did not plan out the way it should. So with a cup and handle, I want to go to 2 minute actually. The 5 minutes a little bit shaky. Here we go. So when I play a cup and handle, I'm looking to enter calls on the pullback to where the majority of the resistance in the brim of the cup on the bottom. Yeah, so Mr. Trace, cup and handle this purple highlight right here. This purple highlights a cup and handle formation. Obviously, looking at what happened, it failed, but just off that right there, there's a cup and handle. So as this is curling, for me, I'm looking at, okay, the main resistance at the bottom of this curl, this is what I want to recontest on to enter calls. So this never happened. If I would have been watching, this is my confirmation. I don't enter calls on like, oh, this may break out of the top of this cup. I got to get in before it's too late. You're chasing calls at a potential breakout that is actually a major resistance. You want to catch it on a historical resistance level, which is where this orange highlight is. But that pullback never hit that actual resistance flip to support. This support did not come down low enough. So I personally don't enter calls unless that contests again. I don't look at stuff like this and say, oh, I got to get in right here. None of that matters to me. I'm focused on what was the level that couldn't break out to get that push back to the upside. That is what I'm watching for a recontest on support. That never touched, so I would not enter. If you do enter a handle here and take this for calls, you have to realize if we push back up like we did and we reject for a second time, the minute we reject here, you can't hold and hope for a breakout. You have to get out and realize, okay, it rejected. My IV may take a spike, but this zone is very heavy. I don't want to risk it right now. I'll come back later. If we break on the upside, I can take calls on a pullback. So if we fail, like we failed here, we came down. Imagine we bounced again and broke upside here, contested high of the day at open, and then pulled back to that level right there. So at that point, let me pull this back. So here you can enter them because you're playing the resistance flip on the break to a support zone, and then you'll take that back up. So you have to be content with, okay, this is rejecting. It should have broken out faster. That's what I wanted to see happen. I'm going to take this and just sell for a gain because if you enter at the bottom here and you ride this up, you're going to be profitable on that trade no matter what. But if you wait for a pullback, a little pullback is going to bring you red compared to your entry down here because the IV affecting the theta. That's the biggest thing you have to focus on. Why did you take that first trade? So the reason I took the first trade, I'm going to switch to the 15-minute real quick. I'm big on bigger time frame entries. So let me cancel all this crap out. Okay. Extend this, and we're good. So I enter on the candle right here. In this candle, that's where I entered. I didn't enter on the 15-minute, but I entered this. What time frame do you trade on? So I enter trades if it's SPX on the 1 or the 2-minute. But when I like watch for entries on things, I'm always on the 5 or the 15. For SPX, the very quick, I scalp SPX and look for like the hidden structure breaks and everything within the charting. So I have to be on the smaller picture to catch a scalp for those hidden structure breaks. When I entered this position on the 15-minute, I was watching all these wicks on top that had rejected already throughout the day. Also with this filled candle, I couldn't break above. We broke straight down, tried to push back up. We kept rejecting. So I was watching this area for a rejection. I entered slightly early. I had my contract set for a limit that would basically fill if this area got touched on the candle wick. I got filled as this pushed up on my limit I already had set. The contract was like 850 a piece. My limit was at 5.5. So I set it well before the actual contract premium was in that price range. I calculated where the pullback would be to get me filled in this area. And since it took a while to push, as you can see on the 2-minute, when I come back up here, it took a while to get up there. This pullback here took a few candles. Once the push happened, the IV dropped exponentially because when calls get like over, like the intrinsic value gets rushed, one side gets hit massive. So a heavy push, calls gain value fast, puts lost value quick. The best part about this entry was I got filled around here. It pushed up and I was down $100 a contract. It was not back to even my entry point before I went back to break even because since the heavy push stopped, rejected quick, puts started to get back in, and that's when it caught back up with the IV. So in this heavy move, puts lost value quick. Once it rejects and drops right back down, the IV switches back over. Calls lose the value it just gained, puts gain value as it pulls back down. I was already up 40, 50% just down here. That slight retraction brought my put up so much because people chase, they push the price on above the ask. The price flies up and then the IV's back in play for the downside. That's how that works out. Like your resource. Yeah, so when I'm looking like I was saying with like time frames that I use to trade with SPX, it moves quick and I'm always playing 0 DTE. I don't care about the long-term aspect of these type of charts. I'm looking at like where's the best low risk entry where I can catch a quick rejection. I'm looking at levels as I play. My target today was 43.88, and we obviously broke that quick. But when we hit this hesitation on a support zone down here, I didn't want to risk holding being up the amount that I was. So I sold here happily. I could have gotten back in. I told myself here, if we drop and go lower, I'm not upset. I'm not going to be mad I sold quote unquote early and I missed the move. I don't care about that. I literally don't care if I miss a move, quote unquote, miss the move because we got tomorrow, we got next week, next month. These type of trades where you catch the move like today, they don't happen all the time. So don't think the one day you miss it, oh, tomorrow I'm just going to bag hold and I know I'm going to catch it that time. It's not always going to happen. So I took what was given. It was not like earned, it was given to me. So for me to earn that, I got to sell it. I got to take those gains and be happy. Once I sold, we pushed. And in the moment, I was like, okay, that was perfect. I was not even thinking about buying back in, and I could have. But that is what I was willing to like get out of my system. This chop here was getting me pissed off. I was upset it wasn't breaking heavy at 4,400. It kept holding. I took my profit and I was happy. I did not care. I was not emotional. I got out pleased. My day was over. How'd you get the level? So that level for the entry. Oh wait, someone said, what are the fees like on Webull? So if you compare Webull fees to Thinkorswim, Interactive Broker, anything else, Webull's fees for regular stocks, like anything outside of SPX or SPY or the QQ, their fees are very, very cheap. I think each contract is like 4 to 5 cents. So instead of paying 65 cents for a contract on TOS or Interactive Broker, sometimes SPX is like 1.2 on Webull. When you trade regular stocks, instead of 65 cents a contract, you're paying like 4 to 6 cents per contract. So over time, if you size heavy on small caps, you'll save money basically per Webull. How'd you get the level? So yeah, that level was literally just, it was a heavy rejection off the opening dome. Once we fell off at open, the day before that we could not break above, we tried to push higher yesterday before close and we failed. That same level was a rejection off of the opening sell-off, aka the drop off that was not even 10 points. We pushed back up, kept rejecting, then we dropped down again. I'm not the type of trader to buy the low on the day break. I buy the recontest. So since I missed the breakdown, I'm watching this pull back up. I'm calculating an entry based off this area right here. This is my area of entry. So as this contract pushed, I look to see what the rough estimate of the contract price would be. I want to catch that wick, and then it falls right back down. So that's what I'm basically doing when I try and snipe the SPX contracts. I don't use ES with correlation, no. I have people that do that and they send me like updates in text, but I personally don't watch the ES or anything. What contract expiration do you trade for? So when I trade SPX, it's usually always 0 DTE or possibly the next day expiration. It all depends on how it's moving. A day like today, I was trying to get swings for puts for tomorrow expo, but I did not get filled because I expect continuation to happen into tomorrow. And then like when I trade regular stocks, small caps, I'll add 2 to 3 months time. So like stocks like Peloton, Snapchat, PLTR, Fubu, American Airlines, Ford, those cheap ones, I'll add months of time because then they move slow. All I do is play the chart in that aspect on the larger time frame, the 30-minute plus. When the price is reaching your levels, what gives you confirmation to take the trade? I've been wrong many times taking trades off my levels. So that's the thing. I still struggle with this. I feel like every trader struggles with it. I put levels for confirmation, not for like, oh, this level touched, I have to get in. It's more so like a visual perspective of this level historically has acted as either A or B, support or resistance. So I know it's going to come back into effect when this level comes back into play. So using that 44.16 level, even outside of just yesterday's low that happened, or was that yesterday's low? Yeah, so yesterday's low, that's where it was bouncing off. But if we go farther back with that 44.16 level, notice how we acted as a major resistance a few times for it. And then it turned into a support. We rejected around this area multiple times. The next day it broke above. We broke back under, never recontested. But once we broke back above it, it pulled back and held right at that zone. I put levels for ideas, not the actual pinpoint. So time frame defined zones, it all just depends on what you're looking at. Levels from years ago, if they're in the PA circumference, they're all going to repeat. My next level on SPX right now is 43.36. That's my next main level that I'm watching. And to finish your question, Kenny, so levels are not always going to work out. No strategy is 100% bulletproof. You're going to lose. So the reason that I play off my levels is because my risk is small. If I entered here and it kept going upside, my cut was 44.16 area because historically that's been respecting PA. So if we would have broken above and closed above, say 44.17 area, that's my cut to lose. I use levels for low risk. The day of and the day before, we had a heavy rejection here. We opened above that level it opened, couldn't couldn't hold 44.16 to support, broke right through massive. Once we broke through, we never got close to recontesting that 44.16 level. We kept rejecting roughly 44.13, including the push end of the day yesterday that could not break higher. So I'm using that zone. That's my entry. My sell is the level at 44.16. It just aligned very well for me. Do you use pre-market low on day, pre-market high day? Depends on what I'm looking for. I use those levels if they come in the terms with things, but I don't rely on low and high. I know a lot of people that's a strategy they use. I tend to just use main levels on the bigger time frames. Do you cut your losses based on percent? I cut my losses based off the chart. So if we would have pushed above 44.16 after my entry, say we push above on the 1 minute and pull back under, I want to see a candle close. I don't just want to see a wick and then it wicks above, I gotta get out. Because I'm gonna move this up just for a visual example. This is not like a level or anything. Imagine saying I'm gonna sell my calls if we wick underneath. This wick goes down, you sell market order, pushes right back up. So I always want to see a candle close above anything outside of the 1 minute. I want to give it time. I like the 5, but with certain setups, you can't give it that much time because if SPX breaks out on the upside on the 5 minute, it can run for another 4 minutes straight in the same candle. So I like to use the 2 minute for my personal confirmation. If we would have broken above 44.16 and the next candle closes above this zone, I see what it does right away, but usually I'm out right away. If a candle's above, it closes, new candle forms above that level, I sell for a loss, not even looking at my P&L. The chart is telling me I have to get out. So that's what I follow.